The crypto market is getting split again. And I think this is a really important thing to focus on because what we're seeing right now is a little bit of a deviation between what current exact price is doing today and some of the fundamental items and some of the fundamental things that are coming in. And so, of course, this might mean that it's already priced in, but I also think we might be seeing kind of a future looking, maybe a little bit of mispricing here, or at least an indication of what's to come, if the patient ones can handle it and wait. So we're going to be talking about that today. We've got a lot of different things to go over today. We're going to be going over some of the top coins that we talk about on the channel, as well as just what we're seeing from a macro perspective and how this could impact each of the top coins that we will be going over. So let's go on ahead. We'll dive right on in. We've got a bunch to go through today. So we'll start off actually taking a look at the total to market cap, because it's been a minute since we've taken a look at this. And the big thing that I wanted to show here is we did kind of move and have that really, really strong move up, and we have seemed to kind of settle in this kind of like in or around this level of support right now. You can see we've broken through it a couple times with wicks, but there is definitely a level of support here that we are seeing. This is really, really good, right? If we can maintain this level of support where we're basically consolidating at highs, again, not all-time highs, not even local highs, but like definitely the swing highs, things are looking really, really good here, because when we do see the next pop, it'll give us a bunch of momentum to get through this kind of this legendary all-time high level. Again, 1.7 trillion is the all-time high for the total to market cap. So when we get through this, we are officially in price discovery, and in my opinion, that is when alt season really starts to kick off. So we're going to be watching very, very closely for that. Some of the technicals that we have noticed is we're seeing RSI come back. RSI is no longer overbought here. It's still fairly strong, right? So I mean, it's not to say that we may not have a little bit further to fall here, but it is definitely recovering nicely. We also can see on the Bollinger Bands getting very, very close to the average here as well. So that's recovering fairly well. Also, we're not seeing these general signs of overextension like we have, or like we were, even a couple weeks back. So this is really, really good. We're seeing a lot of consolidation near highs. We're seeing a lot of these key indicators start to cool off a little bit, which I think is good to see. And then from there, we can hopefully take another run back at some of these highs. But this little cooling off period that we have seen is, of course, completely necessary in my opinion. And that moves us into kind of what we're seeing coming into the market today. First off, we did have the GDP print today. US GDP advanced 3% in Q2 versus the 2.4% estimate. Really, really good to see. This is again showing strong growth within the market. This is very important because a strong GDP is essentially kind of what a lot of people are using to petition for rate cuts from the Fed. We'll have to see exactly what this means or exactly what this looks like, because I do think that there's kind of an argument for both ways. One, the interest rates being cut, we could see the borrowing costs come down. That could essentially further propel GDP growth. We also are seeing inflation start to come down to that 2% amount. If we start to breach below that 2% value, then I think that would be something that would necessitate a rate cut, because of course they are aiming for that 2 to 3% inflation range. Now, the administration has put out that they're looking for kind of like the 3% inflation range rather than the 2%, or I guess the 2 to 3% range that we have historically seen. Technically right now, if we are sitting at 2% inflation, this is kind of within the bounds that has generally been accepted historically. So not necessarily needing any sort of rate cuts going on right now this second. Generally, cutting rates into a good economy can of course be a good thing to further propel a good economy and potentially make it a great economy, but that does leave with the inflation risk there. Right now, of course, with us being at the bottom of the threshold, there is definitely some room to wiggle there. However, I can see the argument is to nothing's broken, so there's nothing to fix, right? And that's kind of like tweaking with monetary policy and inflation rates and things, or not inflation rates, but interest rates. All of that type of stuff is definitely like kind of like tweaking things and trying to fix things that may not necessarily be broken at this point. So I think the hesitation, that's kind of largely where the hesitation is coming from with interest rate cuts. If we go look at the CME group, we can see the meeting is actually here in just over 2 hours. I figured not even worth waiting to record the video because we already basically know what's going to happen, and that is no rate cut. basically 97% chance here being forecasted by the CME group. And if you look at Poly Market, it's between 98 to 99% chance that there's not going to be a rate cut. So I'm feeling pretty confident that I'm not going to have to create a new video or a updated video or anything because of that. I think it's very clear what's going to be happening. No rate cuts. Now, if we go look ahead at September, you can see it does become more likely that we see a rate cut. But if you've been following along on the channel for the past several days, you will actually have seen that this number actually continues to fall and this number continues to rise. It is entirely possible that we get through September without seeing a rate cut potentially. It really does depend on how kind of things go over time. And then if we look at October, you can see still about a 50%, but it's actually again flipping more and more from, it was kind of expected that we would have kind of that second rate cut in October. We're seeing now it's about a 50% chance that we're only seeing one rate cut by October, and it's almost getting to the point where this is rising dramatically. It could, within the next couple of weeks, be the case that the second most likely outcome for the October meeting is that we still have no rate cuts. And so this is something that, we'll have to kind of track very closely and see what happens. Again, I don't think that an alt season is predicated on rate cuts. I think an alt season is, of course, encouraged and potentially magnified with rate cuts, but I don't actually think that an alt season is predicated on rate cuts. So if you are seeing things on Twitter, of people talking about all of how important rate cuts are and things like that, I don't necessarily totally agree. I do think it would, of course, help though. Now, if we take a look at Bitcoin liquidations, we can see 262 million wrecked in the past 24 hours. The vast majority of this being longs getting wrecked. Again, this is due to just, I would say, a downward slant in the market, but overall it's just kind of general choppiness, which is why we are seeing 63 million in shorts also getting liquidated as well. So, but we can see in terms of the pure volume, 262 million, of course, still a lot, but down fairly dramatically from what we have seen over the past several days. So much of the liquidation or much of the leverage in the market, especially kind of the high leverage, has been wiped out at this point, which is why we are seeing this number kind of drop back a little bit. Now, that's kind of the overall situation, what we're looking at for the alt market generally. I think where we're sitting right now, things looking good, but we are still kind of in that consolidationary, just kind of sideways choppiness trading type of market. Until we get some major change within the market, I think we'll have to see, or we'll have to wait and see exactly what actually comes from it. The GDP growth coming in a little bit above expectations is, of course, good news. The lack of rate cuts, again, I don't think is going to impact anything, but we'll have to see kind of how this looks kind of mapping forward. Are we expected to continue to see really high GDP prints? Because if so, that, of course, is very good for the market. Are we continuing to see inflation continue to drop? If we get below that 2% range, then of course there's definitely an argument for interest rates to be cut. Also, given there's the other kind of political side of this, not talking politics directly, but we do have obviously the major debt issue that we're dealing with currently in the US. And so cutting rates, of course, makes a material difference in the refi rate of essentially the US's debt. So that is also very important to take a look at as well. Now, moving along, let's take a look at some of our top coins on the channel, just so we can kind of go and see how each coin is kind of interacting within the market. You'll see each of them kind of performing slightly differently, but you're going to see a general theme pretty clearly going on here within the market. So first off, let's take a look at Bitcoin. Here we can see, again, starting to consolidate. This is on the daily candles. We're seeing the Bollinger Bands really squeezing quite tightly. Again, as we have talked about in the past, whenever we see a tight squeeze, there is usually a break. Up or down, we don't usually know, but this is squeezing very, very tightly. So volatility potentially expected to come very soon here for Bitcoin, at least specifically. We can also see sitting right here in the center of the Bollinger Bands, we also can see price having recovered from being overbought to now just in the strong area. So still, of course, strong, but not like getting close to the overbought range. If we go ahead and we take a look at Ethereum, we can see something very similar. Again, right here, we're consolidating near all-time highs. Of course, not at all-time highs, but very, very close to. If we take a look at Ethereum, we're going to see something very similar. What do you know? We're getting close to, again, not all-time highs. We got a little bit of a ways to go before we get to all-time highs, but we are kind of working in that general direction. What we can see, though, really strong move up, consolidation near all-time highs. Again, not at all-time highs, but very, very close to. This is less of a consolidationary structure than what we're seeing from Bitcoin. We're actually seeing probably more of like a trending upward structure. You can see a little bit of that trend line going on here. And then we do have a little bit of an upward trend line here as well, kind of consolidating still a little bit though into an ascending wedge. Generally, ascending wedges are not particularly positive for the crypto space. So, maybe a little bit of some caution here, but we also can see still overbought showing on the RSI here. So we are actually pulled back within the Bollinger Bands, but a little bit of an overbought signal coming here. Again, this does not mean that we are going to do this, ascending wedge, breakout, break up, break down, whatever. I do think it would make sense if we continue to maybe kind of chop around like the 3,500 to like 3,800, 3,900 range. That would not be super surprising to me, and it would not surprise me at all as well as if we kind of ended up breaking out of the bottom of this and just kind of, again, continuing to chop around, wait for RSI to continue to recover a little bit, and then we can see maybe a further move back to the upside. Now, next off, let's take a look at ICP and see how ICP is doing. This one, of course, should be fairly clear. This is the lagger of everything we are talking about today. Likely not a surprise to many watching here, but what we can see is we did try to push through this level of resistance again. We broke through this first one, but we of course got rejected by this second level. Again, still proving to be quite the task to break through this level. We can see here price, of course, also sinking down a decent bit. It does look like we are finding a decent level of support kind of in this like low $5 range though. So ideally, if we can hold the support and kind of hold up here, that would be great. We also can see again well within the Bollinger Bands and RSI, all looking good here. So some room to run potentially. Now, next one I want to take a look at here is looking at Kaspa. Again, you probably will be seeing a similar thing here. Move up, consolidation. Again, we're really looking to hold this kind of like liquidity zone here. You can see we kind of wicked down below it a little bit, but now we have come back up and we're sitting within this. We've seen a lot of kind of rogue liquidation wicks coming out here, maybe not to the surprise of many people. This is how this generally tends to go. But what we can see, similar type of thing, consolidation, but this is a much more macro consolidation. We talked about this yesterday within the Kaspa video. Very large macro consolidation coming in here. So even if we did see Kaspa break down, and we see him break down, maybe even into this like 6, 7, 8 cent range, I don't view that as the end of the world. Of course, we do want to hold this level here and continue some upward momentum, but given the really strong structure that we are seeing from Kaspa, it wouldn't necessarily surprise me if we found ourselves down, potentially in this range here. So I'm keeping a very close eye on this here. We'll have to see exactly what happens, but overall, Kaspa still looking relatively strong. Again, move up, consolidation, all of the like technicals and metrics starting to come back to true here. We're actually a little bit on the underside of the Bollinger Bands, and we're actually almost just below neutral right now at 49.85. So again, kind of fully coming back on that one as well. The last one we're going to take a look at here on BloFin is going to be Zebec, and then we'll have to go to Trading View for Onyxcoin because BloFin does not have Onyxcoin listed. So if we look here, Zebec looking really nice. If you will notice what we charted in the past, we are looking for that higher high here. So of course that doesn't mean we have to go straight there. We can see a little bit of, kind of moving around and kind of similar to what we see here, move up, consolidate, move up, consolidate, move up, similar type of thing. Hold the uptrend at least until we see kind of that higher high. If we see that, that's confirmation that we're seeing a really strong uptrend for Zebec here. If we don't see that, there is always the possibility that we're kind of moving into more of a consolidationary type of period, and then from there we'll decide on price whether it's to the upside or downside from there. But at least at this period in time, things looking really nice for Zebec as well. We can see here actually pushing towards the top of the Bollinger Bands and just barely not getting into overbought on either of these past two candles for RSI. So things looking okay here for Zebec as well. Of course, as you can see, we have been going through all of these on BloFin. If you are interested, you can feel free to use my link in the description below. Get signed up for BloFin. They have trading bots. They've got demo trading. You can just kind of trade normally as well if you want to do that. Spot futures, all that type of good stuff. We do also have that Sat Sentinel trading bot. I've put my own money into it just because I love to have kind of that kind of hands-off automated type of trading bot type of situation. So I have put my money in there. Also, the link to that is in the description below if you're looking to sign up for something that's a little bit more hands-off. The Sat Sentinel trading bot is a really, really good option. It's a fully algorithmic traded bot, which is super cool. Now, the last one that we have going on here is Onyxcoin. Of course, you can see really, really strong consolidationary structure. We broke out of it just a little bit. Now we're kind of coming back to retest some of these support levels here. We have held them so far. If we can continue to hold these support levels, I do think that does kind of bode really quite well for Onyxcoin. Again, we are not close to all-time highs here like we are on several others, but we are in this very, very strong consolidationary structure from a fundamental perspective, looking quite strong. And so that's the big thing that we want to keep seeing here. Consolidation, letting the market essentially kind of decide on the fundamentals, let the market decide on the macro data, and then from there we can hopefully eventually see that move to the upside. So I think right now things looking very, very strong from a fundamental perspective. We're obviously seeing really, really good news happening from a macro perspective. Yet in the immediate short term, we are seeing a little bit of red, we are seeing a little bit of selling, we are seeing a little bit of fear start to kind of, you know, trickle through the market. I don't see this as a bad thing. I don't see this as anything to be concerned about. So if you are starting to get a little bit afraid, I would probably boil this down to one of two things. One, zoom out, chill out a little bit, or two, you may be overexposed. Maybe you're doing too high of leverage. Maybe you're using too aggressive of positions. Maybe you're trying to 100x long on every pullback and you're getting liquidated. Not a good idea, right? I mean, zoom out, make sure that you're not doing stuff like this, because of course, getting liquidated is a very, very dangerous game to play, and it allows you to essentially lose money in a green market, which is never the goal here. So you need to be very, very careful with what you're doing and making sure that you aren't getting in over your skis. So again, those are probably the two things I would say. You know, you either might be just be too reactive to the market, in which case a little bit of due diligence, a little bit of doing your own research will do wonders for you, particularly in individual positions that you hold. And of course, as I mentioned, the other one, you know, potentially being the other, which is you might be overexposed. Maybe you hold too much crypto as a percentage of your portfolio, any of that type of stuff. Just make sure that you're being responsible and you are diversifying, you are doing proper position sizing, you are doing proper allocations. Again, this is not financial advice, which is why I'm not giving you any specific numbers. This is just something that hopefully you can use as a guideline to help you decide what makes sense for you. I don't know what that is, but hopefully you can use some of these principles and these guiding principles to help you figure it out for yourself. So anyway, hopefully you found the information in this video useful. If you did, of course, a like and a subscribe does always help me out. And if you are interested in staying up to date with what's going on in the crypto market, that's the best way to do so. You can also click that notification bell so it'll notify you every time I have a new video, so you can stay up to date with some of this like breaking news, really, really important and pressing information like this stuff as it comes out. So overall, if you have any comments and things like that as well, feel free to drop those in the comment section. I do try to read and respond to all of those, so you just have to bear with me. Things have gotten quite busy over the past couple of weeks, as you might imagine, with the market doing how it's been. But bear with me. I will get back to you and respond to you, all that type of good stuff. So anyway, thank you guys for tuning in, and we'll see you in the next one.